Good morning, everyone. Good morning. So let me welcome us to another morning market review by Rally Trade. I want to believe you guys can hear me. So my name is Emmanuel Dogu. I'm going to be the one steering the ship for today. Just have a few numbers in the room right now. So I would like us to just exercise a little patience, let more persons join the room so that we can get started fully. But let me do a little sound check here. I want to believe you guys can hear me. Please, if you can hear me, just go straight to the chat room. Let me know if you can hear me. Go straight to the chat room and indicate you can hear me, please. Okay, I can see you there. Thank you very much. So that means you all can hear me. It's a beautiful morning, and I'm going to do a very beautiful and fantastic analysis this morning. And we do this every day, every trading day, Monday through Friday. It's usually an exciting one, okay? So please just give maybe 3 to 5 minutes, then we'll start fully. Thank you very much. All right, guys, good morning once again. Let me welcome us to another exciting morning market review. My name is Emmanuel Dogu. This is the morning section where we try to analyze the market for you every day, 8 a.m. to 9 a.m. One solid hour of intensive morning market analysis. We try to give you previews, review, tips, and tricks on how to navigate the market profitably. So get yourself ready. We are starting immediately, okay? So just like we always do, we try to look at the fundamental side of things, right? So fundamentals are the major movers, or if you like, the major drivers of the market. So as a trader, you're very good with technical analysis. That's thumbs up for you. But then you should also be good with your fundamentals, right? So the major moves that gives us the profits, right, is from fundamentals. So what we'll always do is we try to check fundamental events every day, right? So for you, you should also be checking it. So there are several websites where you can check it. You can use FS Street. You can use my FS Book. You can use investing.com. You can use tradingeconomics.com. So if you're hearing some of these websites for the first time, you may just need to write them down. Later, you can visit all of them. Then you can use the popular one known as the forexfactory.com. So there are several websites. So we're checking this website. We're checking this website to see if there will be high impact news, right? High impact news. By high impact news, let me do this for the benefit of those joining us for the first time. High impact news are high volatility news, right? High volatility news. News that has the capacity to shake the market or to move the market forcefully up to 100, 150 pips in a particular direction. And those are the kind of movements that will wine and dine, okay? So they are the high impact news. So we also have low impact news, okay? So we don't really look at for those ones, okay? So let me share my screen so that we can dive into all of this. So so I've been able to share my screen. So this is forexfactory.com, right? Forex Factory is one of the easiest among all of the several website applications, cutting across trading economics, my Facebook, name them. All right, so this is forexfactory.com. So what you need to do here is just to check if there is news. So this is Monday. Monday, there was no red news. So red news are the high impact news, please. That's our custom here. Okay, so we want to focus more on the high impact news. For today being Tuesday, the 26th of March, as you can see, we have yellow, yellow, yellow. Yellow are low impact news. Okay. Then, of course, this color brown are medium impact. Sometimes, depending on market sentiment, these two cannot equally move the market. For scalpers, can equally move the market and give you something, okay? You can move the market and be able to give you something. Then, of course, for today, we have our high impact news comes by 3 p.m., okay? And that is the consumer confidence, okay? So consumer confidence is generally a survey, right? Asking consumers what they feel about the relative business condition, right? So, consumer spending, right? Consumers having money to spend, right, in the economy is a major mover or the major driver, or is what stimulates the economy. So if consumers don't have money to spend, if they are not confident about the economy, it means maybe consumer spending will start going low. And if consumer spending start going low, then of course the economy is being affected, right? Economy is being affected. So as you can see, we have that consumer confidence coming up by 3 p.m. So generally speaking, we're looking up for this area here. This area is called the actual. Actual is a result of the news. That result of the news, we're expecting it by 3 p.m., okay? By 3 p.m. So that number will appear here, right? So generally speaking, if it is greater than the forecast, then greater than what is expected is good for the economy, okay? So it is good for the dollar, right? Good for the, so that means dollar has the potential of appreciating by 3 p.m. or even depreciating further. But from what I have seen, I think this is, I want to just make some guess, right? So it's most likely going to come out good for the dollar, okay? Because if you look at what the dollar did yesterday, we saw some level of weakness. So this might just augment for that kind of weakness we're seeing on the dollar. Okay? So that's those of us just joining us right now. Guys, sorry about that.
The noise.
Guys, sorry about that. I've been able to meet everybody. Okay. So for those of you just joining us, this is Morning Market Review. My name is Emmanuel Odogo. And of course, we are right now on the Forex Factory. Okay, so you're not really late. You're just right on time. So we're looking at the Forex Factory. So we are saying there will be a news by 3 p.m., right? By 3 p.m. And that news will be on the dollar, right? They are making a guess that news may just come out good for the dollar, so that dollar can move so that it can cover some of the weakness or some of the losses it went through yesterday. So that will be all for today, as you can see, for Tuesday, right? Then tomorrow we have CPI on AUD, right? So this CPI on AUD is actually by midnight, 1:30 a.m. So you want to be very careful there, right? So you can stay awake to trade it. Or if you have a trade on AUD, then you are advised to have a stop loss and a take profit on your trade. Or you are advised to guard your trade very well, okay? Guard your trade very well. You can even hedge in both directions, okay? Then, of course, we have FOMC members speak tomorrow again. Okay, quickly, that will be all for Tuesday for the fundamental. I'll switch right now to my chart so that we can do some technical analysis. So guys, I've been able to switch to my charts. You can see my charts. Indicate you can see my charts. You can see my charts. Okay, please go straight to the chat room and then just type chat, right? Okay, yes. Thank you very much. Thank you very much. You can see my chart. Thank you very much, guys. You're doing well. All right, so just like I always do, I like to always start from the USD index, right? So let's look at the USD index. Let's look at the dollar index. Most of the currency we do trade has a lot to do with the dollar, right? It's almost like the whole market against the dollar. So let's look at what the dollar is doing. So we can see that the dollar has been able to recover from a lot of weakness that it went through the past few weeks ago. All right, so if you look at this carefully, you will notice the dollar on the H4 time frame has been diving until we saw this gap, right? From that gap, started pushing to the upside. So if you look at it carefully, you notice that this market is largely on the H4 time frame is on an upward trend. But take note, after an expansion to the upside or after an impulse to the upside, we normally expect a retracement, right? So that is what the market, the dollar is trying to do on the H4 time frame. So we have impulse to the upside, taking out this high, and that's break of structure to the upside. Break of structure to the upside, indicating strength to the upside, right? So that's taking out this structure to the upside. It has broken this structure to the upside, market structure shift to the upside, and then we got to this point. Take note, after a major break of structure, or even just put it very straight, after a break of structure, we normally expect a retracement. So we expect the market to retrace. That is exactly what the market is doing. The market is retracing, which is good. The retracement is healthy. Retracement is good for the trend so that it can gather more momentum, so that it can have opportunity for a lower price, a cheaper price, so that more persons can enter buy to push it upward again. So retracement is healthy. So when you see the market retracing, so if on an upward trend, the market is retracing, it means the market is moving downward, right? So it is moving downward, offering sell-side liquidity, offering cheaper price so that people can be able to buy at a lower price. So really, at what point will it retrace to? That calls for Fibonacci retracement. So if I draw Fibonacci from this low to this high, why this low? This low because it is this low that is responsible for taking out this high, right? So you don't just draw from any low. So if I draw from this low to this high, I can see that the market has retraced up to, it has not even retraced up to 38%. Okay, so good retracement we normally look at for is 38% of the initial upward or the initial expansion to the upside or to the downside, depending on the area. Then or 38% or even 61.8%. So this is the two level here. So we're expecting more retracement. But guess what? If there is a higher momentum on the dollar may not retrace up to 61 or this 62% you're seeing right here. May just do up to 38% and then start moving upward. Okay. So in other words, whereas there is strength in the dollar, but for right now it's going through some kind of retracement, right? So please, you have to understand that. So retracement can be seen as a temporal weakness. Okay, temporal weakness. You guys understand that? Let me dive straight to my chart. So this is GBP USD. Okay, let's start from GBP USD. So yesterday we saw that the dollar was a bit weak, and that weakness is actually the retracement I just finished talking about, right? So okay, so this is yesterday being Monday. So that yesterday, GBP took advantage of that temporary weakness, or if like that retracement on the dollar, and it traded upward. So yesterday was bullish for GBP USD. But take note now, look here, please, because this is not only giving you entries, this is also analyzing the market for you, making it easier for you to be able to pick trade even by yourself, right? So after this big impulse to the downside, as you can see, or this big expansion to the downside, right? If you watch carefully, at the bottom here, right? So we got what we call an order block. An order block is simply what we want to call an area where there is a large amount of orders, right? Large amount of orders. So, and if the market has been going down and then we see an order block, it means that order block will be a bullish order block, right? So it means the buyers will be waiting. So This is how to identify one. So quickly, this last candle at the bottom. Okay, so this is the high of the candle. And of course, this is the low of the candle. Please, I'm doing this on H1 time frame. You can do it on H4 time frame, higher time frame. Okay, so if you notice, after this candle, we have a big impulsive move to the upside, right? So that's how to validate an order block, right? So it means over here the buyers we are trying to come into the market, and that showed in the next candle we have an indecision on the next candle. See, so this candle is actually a doji candle, a perfect doji candle in which the opening and the closing price are perfectly the same thing. Now, see, you can imagine it. After this long, powerful move to the downside, right? So how come we're having a candle with almost no volume, right? You remember the body of the candle represents the pressure, the momentum to the downside, right? But guess what? At this candle, at this very candle, you can see there is actually no momentum. It means the buyers were able to suck in the pressure from the sellers, right? So that's the meaning of this. Remember, I called this candle, this particular candle, the order block, right? Because it was from this particular candle that the buyers started coming in. Then it showed on the next candle. Then, of course, after that, the buyers actually showed up fully, right? By pushing the market or by an impulse to the upside. Now, how do you take advantage of such kind of movement? So what you need to do is you wait for the market to retrace back to that order block, right? So after you see an impulsive move like this to the upside, the market normally retrace again. So if you watch this one, it retraces again to the high of this candle, right? Right? To the high of this particular candle. So this is where the buy is supposed to start coming in, okay? So by please, from everything I'm showing, I'm trying to tell you that this is where the market actually reverses, okay? You understand that so that you can take that forward in all of your trade going forward, and of course start making good trade from there. So from there, that was where we saw this move to the upside. Then from there, we saw this change of character, if you like, a break of structure to the upside. So the market broke structure again to the upside. That's another sign of the market is moving upward. Okay, so it gave us this high, broke the high to the upside, gave us this low, right? But from what we are seeing here, right here, the candlestick that is being built, they are choppy candlestick. They are not heavyweight candlestick, right? So if the market is building choppy candlestick, by choppy I mean small candlestick, it means it has actually broken structure to the upside again, right? Sorry, let me look at your chat room. Okay, the chat room, but you're asking which is the other block. Okay, the red candle there is the other block. Okay, this red candle, this particular one, right? So it's actually a bearish candlestick. But the buyer showed up in that bearish candlestick and confirmed by a retest of it, okay? So the market forcefully moved up and came back and retested it, right? So you're also asking if yesterday's signal is still valid, right? So yesterday's signal can still be valid if all of the parameters, if everything you saw that validated the signal is still valid. I mean, it's still the same way it was yesterday, right? If not, then it means the yesterday signal must have changed. Do you understand me? You're asking if yesterday's signal is still valid. If everything you saw that made you took the trade, if they are still there, they are still very much there, it means the signal is still valid. I mean, you know, a support can turn resistance. If the support still remains support yesterday and today, the signal is still valid. But if support has turned resistance, then the signal is no longer valid. You know, something like that. So I think, okay, I think if I just continue looking at this chat room, we're not going to do anything today. So I'll come back to chatting again, but let's continue. So I'm trying to say we are booking structure to the upside, right? We have booking again. This structure will be taken out. So these are signs that the market is about to turn. But I have a challenge with that. The challenge I have with it is that remember the body of the candle is the volume, and the volume is actually the pressure, right? The momentum to the upside. I'm not seeing very big, large candle moving upward, right? So that means GPUS is actually struggling. So it means GPUS is actually struggling to move upward, right? It's actually struggling. So we have seen momentum shift, but it's actually struggling. So let me drop down to a much lower time frame, then I'll give you N3 so that we can move further. So my target for this move upward is to come and take out this the liquidity that was trapped here, right? So that was that's my target for this upward move. Okay. So after taking out this liquidity, so something like this, you should come and take out this liquidity. Then from there, it can now maybe nosedive like this. Okay. So it's actually a kind of a buy to sell scenario, right? A buy to sell. So that means a buy to sell, but I'll not give you a buy. I'm more confident about the sell, right? So a sell will be envisaged if the market trade a bit higher into this liquidity zone. Okay, so let me just give you the price at the liquidity zone. So that liquidity is actually the standard liquidity, right? So that liquidity zone is actually 1.267, excuse me, 1.26760. So a sell limit at this expensive price, excuse me. So a sell limit at this premium price up here, 1.26760, right? So any of this range here for today, if the market pump into this area, that I'll be looking at for a sell, right? So I'm not doing an instant trade for now. I'm going to use a pending order. So I'm looking at this area, right? So remember, liquidity has been trapped in this area because if you look at it very well, this area is actually a fair value gap that has not been fully tapped, right? All right, guys. So that will be the trade for today, right? That will be the trade for today. But if you watch carefully again, for those of us that like to scalp very well, so the market has been respecting these lows, as you can see. The market has been respecting these lows, which is very good, right? So if paraventure the market trade into this area, then of course it's going to sweep out that lows, right? If paraventure, please take note, if the market trade into this area, then I'll be looking forward to do a sell, right? So if the market can sweep all of this area, so another sell will be in the stage at this area, right? Remember the H4 time frame, we saw the USA index is on an upward trend. Don't forget that H4 time is on an upward trend. So what we're saying right now is actually a retracement, right? We saw a retracement on the H4 time frame. So that means after the retracement will come the impulse to the upside, breaking structure to the upside. So if the market can take out the liquidity here, then of course it might just move downward further, okay? So because this market structure we are seeing right here is actually a basic market structure, right? So, but remember, the market doesn't always give you a basic structure. The market gives you an advanced structure. So an advanced structure, the market will not be respecting all the lows, right? So the market might just come to tap into that low to gather more liquidity before it can push to the upside. So let me give you this other one. So I've given you the first one. You can sell at this area. The second one, if the market can clear out all of this area, then you can look forward for a sell again, 1.26302. So please take note. Don't forget these things. They are valuable. They are really, really money that you can make on the market. So 1.26302 again. If the market can trade into that area, then you can use your sell stop. Okay, sell stop. So I think I'm done for GPUSD. Let's look at Euro USD, guys. Well, let me look at the chat room. Okay, so you are enjoying the analysis. Thank you very much. It means you're getting value. So that means I should bring offering baskets. So you say which instrument? I'm looking at the chat room, please. Which instrument are you dealing with now? Okay, dealing. I like that word dealing. I'm dealing with GPS, and we have dealt with it. Okay, which other one again? GPS. Okay. Okay, you're asking for the TP. Okay. Okay, the TP. Fine. That's good. So for the the TP would be very simple to know your TP. If you understand support and resistance very well. So for this first one, if the market trade into this area, my TP would be if market trade into this area, my TP will be this level, right? If market trade into the area, so I'm sure it will start descending, right? So my TP will be this level, 1.26511, 1.26. So that would be the TP1 actually, right? So 1.26511. Okay, so but if the market breaks this area, right? Like the second one I gave you, then my TP will be this next stop, right? Then my TP will be around the 1.25990. Okay. So guys, keep a close eye, keep a close watch on GBP/USD. So let's look at Euro USD. Now, same thing for Euro USD. We saw that there was an order block, right? So from that order block, the market reversed. So that means order block. So you may want to write it down very fast. So order block is one of the ways the market can reverse, right? So if you're looking out for reversal on the market, one of the ways you can see reversal is to look out for order blocks. And order blocks normally appear most especially at the extreme of an impulsive move, right? Impulsive move to the upside or to the downside. For example, we saw this impulsive move to the downside. You can see this heavy movement to the downside. At the very bottom of it, let's look closely. At the very bottom of that move, we saw this candle, this particular candle, as you can see this candle. Now, the question will now be, Emmanuel, why are you using this candle? Why not use this red one or this other red? Take note. Now, by seeing this candle, you cannot conclude yet that that is an order block, right? So it has to be validated, right? The validation will have to be after that candle. Remember, it must have been coming from a very big move to the downside, right? So the validation will have to be a very big impulsive move away from it, right? So there must be a very big bullish candle away from it, right? So that shows that that bullish candlestick or the buyers were very much available inside this red candlestick, right? But they were able to show up on the next candlestick. And to validate it again, the market must retrace, right, back to the high or the opening of the candlesticks. As you can see, it retraced back again to it. So exactly what happened on the GBP/USD, the same thing that replicated itself on Euro/USD. So guys, if you're looking out for these things, and I can tell you, you can start catching the market very early, right? You can start catching reversals very early, and of course, start making more money for yourself very early also. All right, guys. So from there, we saw that the market actually broke structure to the upside. By that, I mean, now if you notice any word that is exactly what happened to GPU is the same thing that happened here. Okay, so let me just give you the entries so that we can move on to another instrument. So time is fast spent, and it's already 8:30. What? So guys, I don't know whether you can still hear me. Hear me, you can hear me, indicate if you can hear me. I am back right now. I am back fully back. This is Emmanuel Odogu. This is our morning market review. I hope you're understanding everything I've been saying. You're getting value. Okay, let's just know whether you're getting value. Let me know whether, let me get feedback and let me know whether you're getting value or I am too fast, like I can slow down. But the time is really running very fast. This is already 8:30, right? So we have just 30 minutes left. So indicate if you're getting value. Now you're also free to indicate if you're not getting value, okay? So that I can adjust. Guys, all right, guys. Okay. Okay. Thank you very much, guys. You guys are doing well. Let me share my screen.
I'm getting value. Thanks.
All right, so let's continue for where we stopped. So for Euro USD, let's see how we can be able to let's see how we can be able to get some entries here. So quickly, let me jump to a much lower time frame because most of us are intraday traders. Okay. So the same thing for Euro USD. Euro USD has been able to tap this liquidity up here. As you can see, it has traded. GPS is yet to trade above this high, right? But Euro USD have traded above this high, right? As you can see that, right? So there's another higher level here that I'll just try to mark. So I'll be looking at for Euro USD to trade much into this area before the fall, right? So it should trade much into this area before the fall. So it should not fall right now, right? So it should trade much into this area then before the fall, right? Before the fall, and that fall should be able to take out all of the liquidity trap around this area, right? So I mean, it should be able to trade much lower than these levels right here. So so the entry will be very fast. The entry will be around this area. So there's actually a zone here, right? Now, before any fall, I would like to see either a bearish engulfing or a shooting star, or if you like, an inverted hammer, right? So these are the candlestick pattern I would like to see. But guess what? I'm already seeing. Guess what? I'm already seeing a bearish engulfing here, as you can see, right? So even though it is not rightly inside where I want, right? It's not rightly inside. So most times it's very difficult to target the market precisely at a particular point. So that is why whenever we give signal, right? So we normally come up with a range, right? A range of price. So what I'm expecting to happen inside here is already happening very close to it, as you can see, right? So it's happening very close to it. I'm already seeing a bearish engulfing here, right? But I want it to happen inside here. Then, so from there, I can now start selling downward, right? So let me look at the USD index, whether we can see some kind of strength on the dollar. If we are seeing strength on the dollar, so we can just now, if you watch carefully on this USD index, I've switched back to USD index. I'm not really seeing any strength, any more strength like that in dollar. Even though this on this 30 minutes time frame, this candle is actually engulfing this candle, right? But it's not happening where I actually wanted it, right? Okay. So this is more like a dead zone, right? So this is actually a bullish engulfing, right? But it's on a much lower time frame, and there is actually no sign of change of character, momentum shift to the upside. I'm not seeing all of that. So I would like to see something like this: the momentum shift break, taking out this high, right? On the US dollar index, taking out. So once this high is taken out, right? Then of course a little retracement to the downside. So that will be it for the dollar. So from there, I would like to buy the dollar. Buying the dollar means a sell on GBUSD and a sell on Euro USD. So guys, back to Euro USD right here. So I would like to see that pattern inside here, right? So before I would like to sell. So let me call it for you quickly. So 1.08561. So around this area, it's actually an area, please. Okay, don't get it confused. Actually an area 1.08561. So the price trading into this area, I would like to do is say 1.08561. Then of course my take profit will have to be I would like to take profit when the market trades into this low area, right? Into this liquidity zone. Yeah. So that would be take profit at 1.08322. 1.08322, right? 1.08322. So guys, let me say it again. If there is a bearish engulfing here or a shooting star or any of the candlestick that depicts that sellers are now coming into the market, then I would like to do a sell inside this area. They take profit here. Okay. So I think we are good. But if you watch carefully, what we are having right here is a perfect market market structure, right? Basic market structure. And guys, guess what? The market doesn't really ride on the basic market structure, right? So before you know it, you go into an advanced market structure, right? So because if you watch carefully, the candles we are seeing here, they are choppy candles, right? So the market would like to tap into the liquidity that is resting just below these lows, right? So I mean, if let me draw this very far. I don't know that I will have time for that. So this is impulse to the upside. Let me use this one. Impulse to the upside. This is retracement to the downside, right? So let me do this. It will benefit you. Let me do it very fast. Now, another impulse again to the upside, taking out this high to form a new high. This is another retracement to the downside, right? So this is another impulse again to the upside. So what I'm doing for you right here is called basic market structure. So this high took out this high. So very basic because the highs are getting higher, the lows are equally getting higher. But guess what, sir? If the market is moving like this, it is actually going to be lacking liquidity to pump it more to the upside. So if you notice, liquidity are resting below all of these lows. So the next move would be to trade into these lows, to take out all of these lows. So by the time the market trade and take out all of these lows, then it has entered advanced market structure. Okay, advanced market structure, because it is no longer maintaining the lows again, or it's no longer maintaining the protected liquidity. No, it's no longer protecting it, it's taking it out. Then of course it will now move upward like this. So we might just see something like this, right? Advanced market structure. So that will be it. Let's move over to the next instrument. Let me do GBP AUD, right? I took this trade yesterday. As you can see, this particular trade, GBP AUD. So some of you can be able to tap into this particular trade. Can you see this trade? It was a yesterday trade. As you can see, it's yesterday being 25th, right? So let me do GBP AUD. Let me just give you some free money, okay? This one is actually a free money for you guys. So GBP AUD. So I'm already buying this instrument. I bought this instrument yesterday, and the market dipped further. Please let me just do this one before I start taking all your questions, right? So GBP AUD real quick. GBP AUD. So I actually oh crap, man. I actually took this trade yesterday. So this is yesterday. So why did I take this trade? I took this trade because we saw the same thing, right? An order block, a bullish order block on the H4 time frame. So quickly, let me show you this. Now, I'm not just giving you signal, I'm also telling you the reason why we are taking some of this trade, right? So there was a bullish order block, right, on the H4 time, and we took down trade. Then on this, if you notice, as at yesterday, oh, as at yesterday, there was still a fair value gap here, right? So the market came down further. So this was when I took the trade. The market did very well, right? If you notice, the market did very well, but I did not close the trade. Why? Because I noticed that the market is coming to tap in what we call inefficiency, or if you like fair value gap here, and the market actually tapped that fair value gap, right? So supposing I was awake, should have taken another trade here. And you know, this is midnight, right? So this is midnight. So the market tapped that one and then move further again. So you can actually join this trade, but for now, you can see the market is working what we call a local resistance, right? So the market is approaching a local resistance. So I would have just said jump in, right? But the market is working a local resistance. So two things you can do. So you can write this one as part of your watch list. If there is any further retracement again to this area, to this my entry, so that means if the market goes down again to this area, you can enter 1.9. So you can even set a buy limit at 1.93326. Set a buy limit at 1.93326. Guys, set a buy limit at 1.9. I'm giving you free money, okay? So just write it somewhere, free money. So 1.93326, right? Now, I would have said enter with the buy, but right now the market is working a resistance. It's exactly what happened yesterday, right? So after that resistance, it must dive again, tap in the liquidity here. So I'll give you a buy stop, right? So if the resistance is taken out, because you just buy, I want to buy it. I'm buying for more front. Now, you can do a buy stop at 1.93535, right? 1 point. Now I've given you two entries. One is buy limit, the other one is buy stop, because I'm attacking it from both sides. 1.93535. 1.93. I've called the price several times. I hope you were able to take that. 1.93535. Now, what will be the target? The target would be, if I switch over to 4 hours time frame, because that was where I saw the signal, the target would most likely be to take out the liquidity that will be resting. So this liquidity will be the external range liquidity. So the market will be heading towards this liquidity. Then the ultimate of them all would be the last week high, right? The last week high. So this is one trade that after you must have been taking the profit from this trade, there will be need for to pay your tithes. So this area will be the take profit, guys. This area will be the take profit. Then the ultimate of the take profit will be this area, right? But most people will not be able to endure the price will take out the last week high. So for now, your take profit will be 1.93818. So 1.93818 take profit, right? Then for stop loss will just be this low, right? So you can use this low as your stop loss, right? So just below this area. So stop loss would be 1.92923. 1.92923, guys. 1.92923. So take profit here, the ultimate of it. So those of us that can hold trade for long, we are targeting the high of last week, right? The high of last week. So the market should be able to trade above the high of last week. So guys, that will be it for currency. Let's turn over to something else. So I hope all of us we are still following. Let me check the chat room. Okay, wonderful. There's some message on the chat room. Okay, you're talking about gold. Everybody gold. Oh, just one person that keep asking for gold and gold and gold. So you're asking which instrument am I on? I was on, or I am. I just finished GPAUD. Okay, so let me look at gold. Popular demand gold here. So for GPAUD, I gave you a buy limit and also a buy stop, right? It's one thing that I am very, very confident about, a buy limit and a buy stop. I just gave you that just now. You're asking for the entry again. Before you know that, it's already 9. So let's look at gold quickly. Gold. So you're asking for gold. Let's do gold quick, very fast. Yeah. So gold. So remember the analysis we did on the USD index, right? Will also affect what is happening on gold. Don't forget on that USD index, we saw this is just affecting. Just don't forget on that USD index, we saw that the price was retracing on the H4 time frame, right? Then also we saw, or also we said until this. Now you can see after this bear bullish engulfing, we are already seeing some movement to the upside, right? Which is fine, right? But we can actually trust it more if it can trade above this high, right? Once it trade above this high, then we can now say the perfect strength is coming to the dollar again for the short term, so that we can now start taking advantage of it. So on gold right now. So for gold, let's look at H4 time frame first. So I'll give you a very simple analysis on gold here. Very simple. We are seeing the highs are actually getting higher here. So that is a sign of advanced market structure, right? Even though gold is actually giving us what we call a triangular pattern here, as you can see. This is actually a triangular pattern. So gold is finding support, right? It's finding support on this trend line, as you can see. Finding support on the trend line. So let me drop down to a much lower time frame so that we can have everything in perspective. So I think it's even much clearer and much beautiful here, right? As you can see. So that means our target will be this area, right? But we are rocking a very small local resistance here, right? So for those that would like to scalp the gold, right? This trade will be a scalping trade for the gold, right? Be a scalp, right? Because remember we saw USD index, right? So USD index on the H4 time frame is on the H4 time frame is on an upward trend, right? But we saw a little retracement, right? Okay, fine. So that means the dollar is actually strong from what we saw on the charts, despite the little retracement. So that means on the long term, gold might just need to tap in this trend line liquidity. So actually, there is a liquidity that will be resting just below this trend line. So gold might, on the long term, or not on the short term, on the long term, gold might need to tap in all of this liquidity. That is a sign of the dollar being strong because all of these lows, there are orders, right? There are self-stop orders resting below these lows, right? So gold might need to tap in all of those areas then before any other directional movement. But for the short term, we want to just take advantage of this directional strength we have seen on the dollar right here, on gold right here. So a retracement to this area, I would like to do a buy. So the reason why I'm not buying right now is because now for the short term, it's like a scalping trade. We are trying to scalp good right now, sir. So there is already a local resistance here. I mean by local resistance, I mean a small resistance here, right? So if the market retraces to further to this level, I will do a buy, right? So I would like to buy gold if gold retraces to, let me call the exact price I will be doing the buy on. So if gold retraces to this level, I'll do a buy, and that will be 2171.06. Then of course stop loss will just be below this low. So we are buying gold here, 2171.06, stop loss below this low. And of course, take profit would be at this high right here, right? So take profit, stop loss will be 2168. Remember, we are scalping, right? So 2168.83. 2168.83, right? Then take profit would be at this high. Take profit would be, we're looking at gold coming to test this high again. So take profit would be 2177.78. 2177.78. 2177.78. So guys, that will be it for gold, right? Now, but guess what? Look at this trend line liquidity right here. It may not last for long, so the market will need to destroy this trend line liquidity so that I can have more momentum to move upward. Okay, let's look at okay, I think I'm trying to go through the chat room. So somebody's asking of US 2000. So let's honor that request. So US 2000. But guess what? This US 2000 is actually one of the heaviest index we have. So that means it's actually not for everybody. The reason is if you have small money as your equity in your account, you need to do a top up, or your account officer top up your account so that you can be able to take this analysis I want to do on US 2000. This area, if you have as low as any amount less than 50K, you are not advised to trade here. Go and do a top up on your account so that you can have enough muscle, enough power to trade here. So quickly, let's start from H4 time frame. Let's see what the market is telling us on the higher time frame perspective, right? So we saw that the market recently broke structure to the upside. So that means this market is on an upward trend, right? Or if you like a bullish momentum. So why do we call it a bullish momentum? Bullish momentum because recently it took out structure to the upside, right? There was a break of structure to the upside. And anytime there's a break of structure to the upside, we normally expect retracement. And that's what the market is saying. The market has retraced, right? The market is retracing. Now, the market is retracing. Don't forget, it will retrace. And then if I use my Fibonacci here and draw from this low, right? So why this low? This low because this low took out this high, took out this high. So this low is a strong low, right? So that strong low is usually what normally serve as a order block. Remember, order block. We mentioned order block before, right? So because if you look at this carefully, you will notice this candlestick, right? This candlestick. After this candlestick, right, we got this hammer candlestick here, right? Then immediately we got a very big impulsive move to the upside, right? That validated this candlestick as an order block, right? Impulsive move to the upside and a retracement to test it. So that is the market offering sell side liquidity, right? That means that is the market trying to offer to sellers, right? To offer to sellers. That is for them to take profit, right? Then the market is also giving buyers an opportunity to enter at a much cheaper, a discounted price. Okay, so that means this is where the buy is supposed to start from. Okay, now anyway, but it has already gone up. So it means if I should draw my Fibo from this low to this high, you can see that the market has retraced up to 38%, which is a good retracement, right? Remember that 8% is actually a good retracement. So that means this market is on an upward trend. Don't forget, if it's on an upward trend, what should we be looking at for? Now, if you watch carefully again, we have another bullish candlestick here, right, on the US 2000. Very powerful analysis we are doing here. This one will surely give you some money. If you watch, all of these candlesticks are inside this bullish candlestick, right? So we call that an inside bar, right? So inside bar is actually on the market, right? So the market is here to decide the direction. The market is here to decide the direction. So when will the market decide the direction to go? The market will most likely decide the direction to go if it trades above the high. Remember, we have seen a bullish order block. That's number one. Then number two, the market has broken structure to the upside. So this market is actually on the H4 time frame on an upward trend, right? So that means the buyers or the buys, or if like the buyers have the market in their favor. So if there is a break above this Harami candlestick pattern you see here, we will call it an inside bar. All of these candlesticks are inside this one. That's an inside bar. So if the market can be able to trade just above this high, that will buy. So a buy stop will be envisaged at 2112.0. So you may want to write it down. 2112.0. So you'll be buying at 2112.0. Then of course your take profit will be just this high, right? So you may want to wait until this indecision is over. So you don't trade, you wait until the indecision is over before you can. So I say anyone having less than 50K, okay? Not 250K. 250K, you can be able 250K, you can be able to trade it, right? Using a loss size that is comfortable for you, 0.01, 0.02, 0.03, right? So guys, so let's look at US 2000. Another request again for US 2000. Let's look at US 2000. So I think that our GPAUD trade is still on, right? I don't know whether your must have been triggered. But from what I'm seeing here, the profit has increased, right? So I'm very sure of this trade moving to the upside. So if you have not taken it, you can as well take it, okay? So let's look at US 2000, US 2000 real quick. US 100 rather. So this US 100 here. So please, all of these index are areas where you can actually make good money for yourself, right? But you don't come here with no money. If you have 100K, why not just top up your account, right? Move the money from where the money is not doing anything, and that area is the bank, and move it to your trading account, right? Now, I'm not saying you move all of your money from the bank. No, move some of the money you have there to where you can be able to multiply your money, right? You have made some money, right? The next thing is to multiply the money. Trading is one of the ways you can multiply. So you have already made some profit on US 100. Okay, that's fine. I will not even start it. That's cool. Okay, so for this US 100, the same thing, the market has taken out the structure. So on this H4 time frame, we can say this market is on an upward trend. It's very clear that this market is on an upward trend, right? Very, very clear. How do I mean by that? So the market is actually trading to the upside. I mean, it is printing higher highs and higher highs, printing higher lows and higher lows. So the most recent one being this candlestick traded above these highs, right? So that's a break of structure to the upside. And after that break of structure, we expected a retracement. So I'll use my Fibonacci. I'll draw from this low, right? So this low took out this high. So I'll draw from this low to this high. So the market has actually done a 38% retracement, which is actually a good retracement. Now, to crown it up, that 38% retracement, sitting right on that 38% retracement is what we call a pin bar. And a pin bar, example of a pin bar is the hammer shape. So this is a hammer that is carefully seated on this candlestick, right? The hammer is seated right on this 38%, as you can see, right? So that's to show you that the market has found a support, right? The market has found a support. That means we might continue trading to the upside, right? So the market might be targeting this external range liquidity, right? So the market might be targeting this high, right? So after that high, we expect a retracement. So let me drop to a much lower time frame. I would like to give you a trade here on US 100. So remember, we saw a hammer shape, right? So we want to take a trade, guys. We want to take a trade. So I'm seeing what we call a fair value gap here. So usually the market moves towards the fair value gap and also move towards the liquidity. The liquidity can be internal and external range liquidity, okay? So I would like the market to retrace much lower to this area before I will buy. So I would like to buy at, excuse me, I would like to buy at 18496, 18496 0.15. So at 18496.15. 18496.15. So I would like to buy there. Stop loss will have to be below this low. Stop loss at 18413.22. 18413.22. Then now, after buying here, remember our take profit we have to be back to the H4 time frame. Our take profit we have to be, remember, we are targeting the external range liquidity. So we are targeting this high. So the market should be able to trade into this high and take out this high for us, right? The market should be able to trade. So that would be where we're going to have our take profits. So our take profit would be at 18722.68. 18722. So we are not taking an instant trade on this guy, US 100. We are going to wait for the market to retrace a bit further before we enter our buy, right? Well, enter our buy. So actually, we are buying here, right? So that we can drive the market all the way up. So that will be it for US 100. So guys, it's already 9. We try to run very fast, but time is also running fast. So let me thank us very well. So a very big thanks to everybody. A very big thanks to everybody for staying till this time. Please join us again tomorrow. This is Emmanuel Odogu. Join us again tomorrow for another exciting morning market review.
Okay, what you want to press already?
8 a.m. to 9 a.m. May the market be with you guys.